Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a trade that was done by Franz in MDC Holdings. So here's the chart. Franz, please take it away and walk us through this trade.
Okay. Well, hello, everybody. Hello, Roman. MDC, background, it's a home builder. And you can see we're looking at the daily chart here. Very nice uptrend from the left into a sort of a buying climax action, not an overt amount of selling there into the automatic reaction. The secondary test is nice because it's actually at a slightly higher level. Sometimes you have to worry about that because if it's a real strong momentum stock, it can kind of be a tip-off that things are starting to run out of gas. But in this case, we go through this trading range that starts in basically the beginning of August and it goes across through pretty much the end of 2021, and this stock showed up on my watch list. The entire home building industry has been a high-ranked industry for a substantial amount of time. So my read on this was after we went into this reaccumulation period, I kind of fell into the phase B or phase C trap and thinking, well, first of all, we have a little breakout here, which isn't too bad. That first bar next to the POE number 1 does extend a fair amount above the resistance. There's a little bit of an increase in buying that you can see there. It's tested right away and then kind of attempts to extend, but it's more like an upthrust. And my entry there probably wasn't the best. It was on the test of that first significant bar breakout, and then I didn't really have I was looking at this as a campaign, so I had my stop loss all the way underneath basically the entire trading range. So I fell into the old phase B trap where we swing up and then we swing back down again, and I'm kind of stuck holding the bag because I'm not really paying attention to what's going on. But at any rate, we go down, we just slightly spring the support the second time, have a really strong recovery there kind of at the end of October, early November, and then a nice test, a nice pullback to a higher low, and really nice entry there. I'm pretty happy with that entry. So is this going to be our sign of strength rally that takes us to a major sign of strength that shows that we're ready to break out of the trading range? Well, no. We go up, we basically go up and test the previous high, and it's just a slight little upthrust there where I say, can absorption occur here? Because I'm in a position with two positions now. And it doesn't, it reacts again. But look at the volume on this last reaction towards the end of 2020, just at the end of December there. Look at the volume characteristics and look at the actual ability of sellers. Look what they can get done. They just can't move us other than that just a little bit of a spring action there. We're above the midpoint of this range, which is a great sign. And this would have been in hindsight a great place to get in, but I'm already in with two positions. So we get a nice breakout. Look at that significant bar there with a real strong volume around the 19th of January. Looks good, goes up, gets tested. Another entry there on the test. I like that entry. One more entry as we go through the previous high, and then I've got a full position. So I'm just kind of sitting with it, seeing what's happening, and I've got the uptrend channel that the stock kind of evolved into marked there with the mean through it, and I have that stride with a question mark because it's just not really making a real aggressive move. It has a decent cause behind it, but it's just not moving with an aggressive kind of, and there are quite a few tests along the way that are a little scary. So I'm moving my stop losses up all the time. Finally, going into May, I decided, hey, I'm going to move my stop losses up because I didn't like that last where I have got an up thrust towards the beginning of May there marked, and then the change of behavior. And I'm thinking, okay, I'm suddenly changing my intention of the trade from from a campaign to a swing, and move my stop losses up and got stopped out. So that's the story, and I'm sure you've got a lot of observations to make about reading the chart and so on and so forth.
Well, first of all, let's recognize that this is a profitable trade. I think it's important sometimes, especially with this series. I mean, like if I would be watching this series from the beginning, I probably would be like, oh my gosh, like there are so many mistakes that this guy show. Like, why would I even be studying with them or like study Wyckoff methodology? So let's recognize the profitability of this trade. I think it's important. Well, secondly, let's just go through some of the entries here. I could definitely see why entry number 1 was made, because the volatility of this range is very low. And we have an increase in the volume signature right before the price starts to travel up. So that usually is going to be associated with the potential phase C. And, it would be okay for us with such low volatility and then the local increase in the volume and spread, into the higher low. That would be suggestive of the continuation. So I totally understand this entry. The true phase C, which came right here, has that spring character to it. And then the test is very interesting. And I really like this entry here. I mean, obviously, in hindsight, it's much, much easier to recognize. But in real time, how would we see that this is a good entry? Supply is increasing, effort is increasing to the downside, and yet we are making a higher low. And more importantly, just because there is so much supply, we can't really go into the position right away on that day. We have to wait for the next day that confirms that this is the starting action for the test. At the same time, it's interesting that this supply and the way how the price reacted to it suggested more testing. And the testing goes into this kind of like upsloping price action, which suggests strength. Usually after that, there comes some kind of reaction of the same magnitude than the initial change of behavior for this action. And here we are. I would agree with you, Franz. This would have been a really good area to enter as well, especially considering that you had some positions here. And then obviously just on the breakout by itself, also really good. Everything else is kind of a textbook. A test that comes into the significant bar, breakout bar zone, it's really good. So we're buying here, great entry. I'm okay with this entry as well, breaking out. The test is a little bit deeper here, but then there is a continuation, so everything looks okay. Definitely, this is a deviation from the trend. So I think it's okay for us to scale out here to take profits on the position. My question is about that switch from swing to campaign. So what I probably would do is I still would go with the potential scale out and exit to a certain degree here, and maybe just leave some. And even though the price goes down, we don't have the full data here as we're recording, the price goes down, but your original entries in this area, still above, even where the price is right now. And maybe we collapse, maybe we do, but then you would close your campaign position probably somewhere here, like on a more distinct failure. But taking the profit here, taking some exit opportunities here, I think totally fine. Another point that I wanted to make is just the overall stride. So at the point of like where we look at this, we're kind of at the support. It was broken after that. So an exit rate here also would be valid, for us. So I would say that why don't we celebrate for a profitable trade? That's number one. Why don't we celebrate some of the great entries here, like this one, this one, this one? I think that all of those three are great. This one is okay too. It's just happened this way that reaction came. So I would probably just in terms of the extraction of some points, it's just that switch from campaign to swing, where maybe we could have left a little bit just to see how campaign would develop. So that's the only thing, Franz, that I really can contribute to this trade analysis. What do you think?
Well, thanks, Roman. That's I especially thought that where you pointed out the reaction back in November of 2020 and how something with that much kind of aggressive selling is going to be tested. And there's wow, that's great. What a great observation. So I really like that. And one thing that's kind of interesting is that the stride of the move off of the March lows back in 2020, which we're not showing all of it, that rally was much stronger than the rally that's sort of a stair stepping type of arrangement since then, which is all right. But anyway, that's
well, let's go through the post analysis. So bias, I would say definitely yes.
Okay.
I mean, just because there are so many entries, I would say yes as well. Would you give it a yes?
Yes, I think so. That first entry, I don't know. I thought some of the entries were pretty good, and the timing was a little premature there at the beginning. So, but okay.
Okay. Character.
The character. I mean, this is like you say. This is a money-making trade, but it's not. We're going from 40s up into 50s, so it's certainly not setting the world on fire. So I'd give it maybe a 50-50 on the character at best, if that. I don't know what you think.
Okay. Yeah, I mean, to me, that's actually, I mean, whenever you make money, it's a good trade, regardless. In terms of the character, our expectation was that there's going to be some kind of outperformance here, and there was. There was at the beginning, and then all of the housing stocks were influenced by the higher prices in lumber. So it just kind of happened this way. You can't really foresee that that much into the future. Okay, points of entry, I would say yes. Let's go with yes. Even though the first one was not perfect, but the other three were great. So I would say yes. Stop losses?
Yeah, I think my stop loss management was pretty decent.
Okay, add-ons, definitely yes. And then the exit?
Maybe 50-50. I like the idea of the scale out more than the just getting chopped out of the whole thing.
Okay. So we are 6 out of 7, which means we are at 86%. Good variance. Okay. What are the lessons here?
Well, I think one of the lessons is that for me, it's, my chart reading is thanks to you, thanks to, all of the the teaching that I've slowly been absorbing, my chart reading is getting a lot better than it was, years ago when I started studying this process. So I think that's, keep on keeping on, but making strides in that direction. I think that the intention issue, is this a swing or is this a campaign? Yeah, sometimes my patience gets in the way of my results. So that's probably a good takeaway.
Yeah, I would say that for me as well. Like,
Yeah.
and I think the more advanced you are, the more experience you have with the switches between, let's say, timeframes, where you go like on a lower time frame you enter from intraday, and then you switch to the daily time frame, or from the daily you switch to the weekly, and then you switch back, right, from the weekly to daily. Both are legitimate processes to do. We just need to do them in the correct places. So definitely something to think about. And in a way, Franz, I think this is a progress because you are less concerned now. I mean, like looking through all of the anatomy of the trades that we've recorded together, I'm definitely seeing a lot of progress with your trading. I mean,
I hope so.
what am I even saying? Like, look at the points of entry. I mean, like this is fantastic. This is great. This is also very good. I mean, yes, I think that I really don't care about this one because this is a campaign. So you want to be in the vicinity of the reversal. You want to be in the vicinity of like where the price takes off. My only comment on the entry would be like this area right here, especially
That was a big
this,
mess. Yeah.
yeah, with those two that you open later on, so you're not fully sized at this point, and this would have been, a much better entry. Also considering that your entry here would be lower than, let's say, the entry right here, so you would sequential kind of like higher lows type of entries.
Yeah.
But other than this, I mean, let's give ourselves a credit for the progress for this year that you've made, because a bias was identified correctly, points of entry correctly, scales in correct. So what it does when you are becoming more proficient with the mechanics of how you analyze the chart or how you enter the position, you can start devoting more mental power and more time to other things, to the things that come next. What about stop loss movement? What about exit? What about the switch? What, on the trade intention? And I think that's exactly what's going on here, Franz, with you. So again, it just showing the progress that you've been making throughout this whole year.
Well, thanks, Roman. Appreciate that.
Absolutely. Okay, well, with that, really good episode for us. So, just a quick announcement, and we're gonna repeat this in some of the videos that we're gonna make for the next 2 weeks or so. That we're gonna have a break in July, August. It doesn't mean that the videos are not gonna come out, but there might be just fewer videos and they might be more spread out. So just keep this in mind, guys. We know that we have kind of like our devoted small following that we have, so we want to make sure that you have the material as we go through July and August. But at the same time, there might be a week or two where we're gonna miss that. With that, thank you so much, and until the next week.
Thanks, Roman.